Good morning, good afternoon, or good evening to you, wherever you are in the world. Thank you so much for joining our live AMA tonight. I'm your host, Liam. I'm the client manager here at CryptoTaxAudit, and I'm very grateful to be joined by the president and founder, Mr. Clinton Donnelly. Clinton, how are you doing tonight?
I'm doing great, Liam. Glad to be here. It's exciting to be talking about crypto taxes at the end of this year. But, you know, this has been a tough year for a lot of traders. A lot of people just call me up with sad stories.
Yeah, for sure. I mean, when we spoke last year, it was in Q1. So we had just come off the euphoria of the bull run. You know, everyone was making money. Everyone was ringing us up. You know, how do we report all these gains that we made? You know, how do we avoid an IRS audit? So I think tonight's discussion is going to be a little bit different. But you've been keeping yourself busy. I know you did a US tour of crypto conferences, and you know, maybe let's give our audience maybe another minute or two to join, and you could tell us where you were and who you met.
It was a real blessing to go to Denver. Went to one of the Cardano conferences, the Rare Bloom conference, which was magnificent. Hearing about all the exciting things in the Cardano world. Talking to Charles Hoskins. Then we went to Las Vegas for the Litecoin conference, which was really an upbeat group. I mean, Litecoin is a pretty exciting coin. It's one of the coins that I use to pay my staff. So I'm pretty excited about Litecoin myself. And then we went to the Pacific Bitcoin conference in Santa Monica. And that was special. We got to see a lot of big speakers. Michael.
Oh, the main man.
I get his name off the top of my head. Sailor. There you go.
Sailor.
And excellent, really upbeat. And it was right then that the whole FTX arrest or scandal had broken up, you know. So and you know, Bitcoin maxis have a different view of that sort of thing. Then we went to Miami, went to the Decentral, and then up to a Benzinga conference in New York. Very exciting, meeting a lot of the players. And maybe I'll post some pictures in the next couple of days on my Twitter space at CryptoTaxAudit. Yeah.
And we actually
really loved it.
We've got a small clip of you. Maybe we should show the audience a clip of you up in New York, which is going to kickstart off our discussion tonight.
The IRS commissioner said, hey, look, we bring in $4 trillion to the U.S. government. We can bring in $1 trillion more if you give us the money to go after enforcement on people with digital assets. That's you and me.
Mm-hmm.
The government accepted that challenge, and they gave the IRS massive amount of money. You've heard about it, 87,000 new agents. They don't have those yet. But the IRS has basically been weaponized by your Congress to go after crypto traders.
This was a huge discussion last year. Everyone was freaking out on Twitter. I mean, our phones were hopping. We were getting emails. What's going on? Would you elaborate a little bit on, you know, what was proposed and what's happening?
Well, yes. So as I stated, you know, back in August of last year, Congress and the White House approved a funding of an additional $80 billion on top of the regular budget for the IRS. Of the $80 billion, and this is written into the law, $46 billion is specifically earmarked for enforcement activities on digital asset owners to get them into compliance. Well, digital assets, the new term now for cryptos.
Yeah.
This is very serious. $46 billion. I mean, let's put this in context. That is 4 times the annual budget of the FBI. All right. And so this is a massive investment. The 87,000 agents is a number that came out early last year. It's not exactly what's going to happen, but the commissioner did say that they would get an additional 4,800 criminal enforcement officers. This would basically triple the size of the criminal enforcement group. Why is that important? Because in terms of going after enforcement of digital asset owners, there's 2 major strategies that the IRS uses. One is, as you can all understand, is audits. You know, you reported this, we check it out, we think you owe that, pay the difference, let's fight over it. And that's a very long, drawn out process. And we have, you know, I've defended 40 people in audits before the IRS. It's painful. It's stressful on your marriage. I mean, there's a lot of things about it. But it's not as conclusive as the IRS would want. It's very expensive for them to harvest that type of money. The other approach is what we're seeing more of, which is criminal enforcement, where with criminal enforcement, all they have to do is show that you didn't report your crypto income. This is not a matter of I reported 90%, but I didn't report 100%. It's like they're generally going after people who are not filing a tax return at all. And there's a lot of those in the crypto space. Or they filed their tax return, but they omitted all the crypto income. So two of those scenarios, hiders and non-filers. So with criminal enforcement, all they have to do is show that you didn't report some income, and then they turn it over to the Department of Justice, and the lawyers contact you, and they inform you that they're going to indict you for tax evasion or tax fraud, either one. And the beginning charge is $250,000 plus 3 to 5 years in prison per year that this infraction happens. So that's where the plea bargaining starts. It's a much cheaper route for the IRS to do enforcement, because they don't have to go through the ordeal of a audit and arguing over what the correct amount of gain is. They just have to prove you didn't report it, and the threshold they have to meet is $10,000. So, and I have a client to whom this happened, and this would be good for everyone to hear. This client had received Bitcoin from a private exchange from someone else. These Bitcoin had never been on a public exchange. He held them on a private wallet. He didn't report it on his tax return. One day, 2 IRS agents, the ones with the badges and the guns on their hips, showed up at his door at his house. His wife answered it, and they said they wanted to see him down at the office. So he brought a couple lawyers. They talked to the IRS agents, and they said after the conversation, we're still investigating you. And what happened was that they had discovered his Bitcoin address. They dusted his Bitcoin wallet with thousands of satoshis. And every time he makes any transaction from that wallet, these satoshis go along with it. And so it's trackable for them. And by that means, it's very inexpensive. Once they knew the wallet address, they could track where you're moving the money to, and they were able to prove it. It was case, and then he got the call from the lawyers, and they informed him of it. He went to a couple tax attorneys, and they said, "Your best hope is a nice lawyer who will do a plea bargain with you, because you have no hope." And he went to 2 senior lawyers, and they told him this. And ultimately, he went to prison, and he had to pay all his taxes for the years that he hid. Plus, he had penalties as I mentioned, of roughly $250,000 plus, time in jail. And the worst thing about that type of enforcement, which is everybody should be aware of this, is that that's a felony. While you might serve just a year or less in prison, you're a felon for the rest of your life. And he made a statement which is just compelling. He said, "Clinton, if I get pulled over for speeding, and the policeman takes my credit card or my driver's license, and he sees that I'm a felon, the chances I get off with a warning are pretty low. And it affects all the rest of your life. It'll lock you out of certain careers and professions, the financial industry, any industry where there's a top secret clearance, military industry. You're really a lifelong effect." This is the type of thing the IRS is going after. So they're going to spend this money on the criminal enforcement. The Department of Justice has hired another 150 lawyers just to support the criminal enforcement of this. So this is big, really, really big. Going after digital asset holders is the #1 enforcement priority for the IRS for the next 7 years. That's very big.
That is absolutely terrifying, Clinton. It gives me goosebumps when I hear that story. And, I know that client, a normal guy, like everyday person, when they say, with a felony like that, perception changes, when he meets a cop or he applies for a job. So absolutely terrifying. Let's flip that on its back, because I seen an interesting tweet from Lark Davis, which is saying U.S. House Republicans are going to vote on a bill to abolish the IRS and get rid of income tax. Do it, he says. Can I get your comments on that, Clinton? What do you think of abolishing the income tax?
Well, hey, the Republicans just got into power at the House, and they had to check some political boxes, especially for some minority members, and they put this bill forward. It's not voted on. It's just been placed forward, and it's going to be considered. They also had a bill that they put forward, which was to actually reverse this $80 billion funding that we talked about. That's, first of all, the $80 billion, that'll never get reversed because it won't pass the Senate. It's still democratically controlled, and it won't get past the White House. That's going to happen. With regards to this, so anybody who's hoping that thing's going to go away, don't hold your breath. Abolish the tax code. I looked at the proposal, and it is something that's, let's say, a very right-wing aspect of the Republican Party talks about. It'll never happen, in my opinion. And ultimately, it's broken down on its merits. First of all, it proposes a national sales tax instead of an income tax. So what does that mean? So they're going to put the burden on the states to collect this sales tax. So the proposal coming out of the gate is 23% the first year, and then subsequent years will be based on the amount of money that that the federal government needs. Let's just assume that's a bigger number, the 23%. And that's on top of whatever your state sales tax is. So let's think about that. So you have an income. Let's say you make $100,000, of which, say, $25,000 is taken by income tax. So under this proposal, okay, you keep $25,000, but everything you buy is now 23% more expensive. All right. So as they say, there's less money, the amount of money in your wallet at the end of the month is not going to be any different. And rest assured, anytime a politician's talking, he's lying, right? That's how you know that's how you know when they're lying. The second thing is when a politician's talking, you got to watch his hands because that's when he's stealing things. So rest assured, the switch to a national sales tax will definitely result in more money for the federal government. They have no incentive to do it except to do that. And the other problem is, we used to, if we go back 100 years, a little bit more than 100 years ago, government was paid for by people who use services. So if you needed to get something through customs, you paid a large fee. All right. So the people who needed government services actually funded the government through the fees. This had a problem because there are a lot of people in the U.S. that need government services but have no money. The poor, young children need national education. We need highway systems and trains to help the masses. You really can't improve with that type of funding. So they went to an income funding model, an income taxation model. Income taxation model is attractive because you can tax the wealthier more because we use a progressive tax system. The wealthier pay a higher percentage than the lower payers. So, and of course there's exceptions. I'm not getting into that, but that's the concept, that the wealthy pay. And in the US, it's true. About something like the upper 5% provide half the budget of the US. So I got that. That's, that's not exact. So when you switch to a national sales tax, you're not taxing the wealthy anymore. You're taxing people who buy things. Yeah, the wealthy buy things, but they don't buy as much because they're saving. Okay. The poor, it's going to hurt them more. So it's a very punishing tax. Plus, you're expecting the states to collect money and give it to the federal government. This gets back to a really old issue in our country. It has to do with states' rights versus federal rights. I mean, what's the likelihood that the state of Alabama, if it taxes 23%, is actually going to give it all back to the federal government? You got some really rebel states out there that might want to be contrary and hold money back because they don't like what the government's doing. It just breaks down on so many fronts, but it's kind of attractive to talk about.
Yeah, absolutely. I mean, that really, when I see that ripping through Twitter, everyone talking about it, maybe people are thinking, hey, that's all them, agents, that were coming after crypto. Maybe I'm back in the safe zone. So, you're hearing it from the main man here. They're still coming. They're weaponized. They're geared up. Crazy stuff. I wanted to get on to an interesting video actually from CryptoWendyO. I think most of our audience may know her. She had something interesting to say, which I had some questions for you on.
IRS is warning that there's going to be a big change when filing taxes in 2023.
You forgot a couple things. Let me help you out. Number one, if you bought, sold, hold cryptocurrency and you did not disclose, They are coming for you. Why do you think all the exchanges in the US require you to KYC? Why do you think MetaMask is tracking you? They're tracking your IP and wallet addresses. Go read Infura's terms of service. And yes, let's elaborate more on the $600. This is why I scream that we do not need new regulation or more regulation. The current laws and regulations we have are very predatory for the little guys, for us, the underdogs. If the public servants really cared about the elite paying their full share, they would have never included that you need to report any payment you receive over $600. Some people are saying this is for small businesses or businesses, but at the same time, it's a very low amount. Best believe they will find you, they will audit you, and you will get penalized. Pay your taxes.
Wow, some big words. You know, she brings up some really good points. Shout out to NDO. So Clinton, you know, how do they know about your trading activity, the IRS? And
that's a great question. You know, and I like CryptoWendyO. She's I've had a chance to talk to her on a couple occasions. She's amazing. I think she's really passionate. And she's also passionate about paying taxes. That's a big thing for her.
There you go.
She makes two comments. One is they will know, and second one is talking about the $600. Let's break it down. They will know, and the IRS has the primary way they determine who to audit is if you don't report as much income on your tax return as they know about. Okay, so if you don't file a tax return and they know you have enough income, then they're going to start asking questions. They might come after you for either with letters or, you know, the guys with the guns. Now, how does the IRS know how much income you make? People that pay you money have to issue a 1099 form if they pay you in excess of $600. This is already in the laws. All right. What she's referring to is particularly for crypto exchanges and brokerages and stuff like that. The threshold is they have to report to the IRS a 1099 if you make over $20,000 or have 200 trades or transactions. This is true for you know, people that sell online and things like that. And they're lowering that threshold down to 600. So this will bombard the IRS with a whole slew of these 1099s. Again, more information. Do they need that level of detail? I mean, $600. I mean, good grief, $600 is a really low number. I mean, you know, you and your friends go out for dinner and you've dropped, you know, buy a couple bottles of wine, you've dropped 600. You know, especially in a big city. Let me say this: the IRS has additional information about who has cryptocurrencies. They have systematically over the last several years filed summonses and used other mechanisms that aren't public to obtain information from exchanges about U.S. account holders. They may not necessarily know from that exchange that it's you, but they know you're operating out of as Wendy points out, a U.S. IP address. So they know these things, and then they can run programs that'll connect these. And they can say, oh yeah, this is Liam. You know, he's used that address. This is Liam. And it looks like from that address, we can just scan through. It looks like he generated proceeds or sales of, you know, $500,000. He's kind of a high frequency trader. Did he report that on his tax return? Oh no, over here Liam just said he had 100,000 of income only from his wages, you know, his W-2. So that is what triggers the IRS and selects you for an audit. And then once they select you, they'll decide if it's going to be a paper correspondence audit, if you're going to talk to a real auditor, or a referral to criminal investigation. So now they know about pretty much all the U.S. exchanges. They have that data. If you deal on a U.S. exchange, they know about it, and just assume that they know who you are.
Yeah.
If you're on foreign exchanges, they can make some connections. They're putting a lot of squeeze on certain foreign exchanges to divulge information, to apply the FATCA laws. The net is tightening. On the $600 thing, you know, just to put a little more clearly, this is not any payment of $600. This is if you have received in the course of a whole year $600. So, you know, it's not a matter of structuring your transactions to all be less than 600. I mean, if you know, 600 is can be anything, right? People pay you money on PayPal. You know, somebody buys your car and they send you $2,000 on PayPal. PayPal's going to report that to the IRS and treat it as income. So you're going to have to, on your tax return, explain why that $2,000 shouldn't be taxed, that it's actually you bought the car for $15,000 and now you're selling it for $2,000, that it's actually a loss. Now think about that. That drags the average taxpayer into a bigger burden of having to defend more things in his tax return. There's more detail to apply. And tax, in the US, that's just a massive burden. We just don't, it's just excessive. There's other ways to do it, but I'm not sure that's the best way.
So Clinton, what if I decide, okay, I'm a US taxpayer and I want to sell some furniture on eBay and I receive $800 for a sofa? I mean, are they really going after that? Is that something I need to report?
Well, when they start doing it, yeah, you're going to have to explain that $800 of income. Wow. So, what are you going to do? You're going to have to go like, wow, what was that I sold there? Or it may have been a multiple thing. Let's say if you sold 20 things, now you got to go back and reconstruct what the cost basis was on those things and put it down on a capital gains form, which is a form that most people never deal with unless you're an investor. Yeah. It's very stressful, I think. It's very stressful.
Yeah. They're really ramping up. Okay. Well, as we mentioned at the start, 2022 for most people,
I should say, let me add, this law was supposed to go into effect this year. That means this January you'd be receiving these low dollar 1099s, but they postponed it until next year because they said people needed more time to put it in place. So just a little final note adjustment.
No,
sorry.
No, perfect. 22 was a year most people want to forget. A lot of people were, they got their fingers burned somewhere. If it wasn't Luna, it was Celsius. If it wasn't Celsius, it was BlockFi. If it wasn't BlockFi, maybe it was FTX. So, a lot of losses last year. Can you claim your losses to reduce your tax bill? I know that's a popular question.
Yeah, this is really big. This is a hot one. Everybody listen up. So there's lots of different types of investing losses you could have. One would be a capital loss. That's where your losses for the year are more than your gains. You have a net loss. Now, the law limits that amount that you can reduce your adjusted gross income to only $3,000 of that loss. If your loss was $50,000, then you can take $3,000 reduction on your income this year, and then $47,000 is what they call carried over to the next year. That means next year you kind of start $47,000 in the hole. That's nice for next year, but you'd kind of like the benefit this year. That's a problem. That's capital loss. Another loss that you might have would be worthless securities, which since the IRS kind of applies security laws to crypto, that's what we would apply that to crypto as well. That is to say, you bought something, it's now worthless because they're no longer working on that coin. It's dead. It might be like Luna or UST or something like that you had is now worthless. You could write that off as though it were sold for $0 on the last day of the year. That would be treated as a capital loss. The third type of loss that affects investors would be a theft loss. And a theft loss is interesting because it's a deduction on your itemized deductions. So if you itemize your deductions, you can claim theft loss of investments there. And I should mention that, I'm talking about investments, and I've read on, certain crypto tax gain calculation services, they say, no, you can't do theft loss. There's a lot of misconception out there because the IRS or Congress actually made it that your personal casualty losses cannot be deducted. That's a special rule starting in 2018, going for 8 years. However, a lot of people make the mistake. They don't understand Section 165 H3, which says that applies only to personal assets, not to transactions that are entered into for profit, which is what all crypto is. So you can take a theft loss on crypto. You can take a theft loss of what you put into it, not what artificially it might have gone onto us at one time.
Gotcha. Yeah. And there's a lot of, I think anyone who's in crypto, there's a lot of scams out there. There's so much going on. So
rug pulls. Hack. Like if you get a wallet hacked, somebody stole something, you could claim that as a theft loss. The difficulty with a theft loss is you have to prove two things. One is that you have to prove it was taken, and that it was taken with criminal intent. Like if you get hacked, it's kind of hard to prove that you were hacked. I had the coins before, now they're not there. I could show you the transactions where they all moved off, but I can't prove criminal intent because I don't even know who did it. So that's difficult to meet the proof threshold for theft loss, in which case you can take it as a capital loss.
I just you mentioned something there just earlier. I just wanted to see if I heard you correctly. So I've got a Ledger wallet, I've got some Bitcoin in there, and let's say a Bitcoin is taken out. Bitcoin's value today is $20,000, but I actually bought it. I bought it for a different price. So you're saying that I wouldn't get the whole $20,000 as of today, because I could sell that on Coinbase today for $20,000. It's what I purchased it at. Did I hear you correctly?
Right. You can only claim your investment amount, or your 5,000, or the lower price, like the cost basis.
Yeah.
Now, the exciting thing here, this is what's exciting about most people, is there was in 2009, 8, a scandal with Bernie Madoff's investment fund. Millions of people were involved in this, and it brought to light the difficulty of claiming a theft loss on investments this large. And these were a lot of wealthy people. They had clout in Congress. So IRS came up with what we call the Bernie Madoff procedure. It's IRS Revenue Procedure 2009-20, amended by 2011-58. And what this procedure does is it makes it easier to prove a theft loss. It creates what they call a safe harbor, which means if you do these things, then the IRS is not going to push any further when audited. What do you have to do? The proof for that you invested the money, you don't have to wait on let's say the statement from FTX that shows that you put the money in. If you can show from somewhere else that you transferred into your FTX wallet, you can show that transaction happening. That's satisfactory to prove that you moved it in. So just to tease your example before, I bought my Bitcoin at 5,000 and I transfer it into FTX when it was 25,000. Okay. Yeah. And now it gets lost. And it was 20,000 at the time the FTX closed down. I can't get it. What do I write off in that situation? Well, the price that it entered into FTX was 25,000. So you can claim that price at that time. Slight difference there in how the law is written. Secondly, the benefit of the safe harbor is, remember, we have to prove that it was taken. Well, and that it was criminal intent. All you have to do is that there now be an indictment, either at the federal or state level, either criminal or civil, against the promoter of the fraud. In this case, Bernie Madoff type of person. In our case here, we got Sam Bankman-Fried, who's like the promoter of all promoters, and he has been indicted by a criminal indictment. Okay, so that satisfies the safe harbor requirement to show that there was criminal intent. It doesn't have to be convicted. It's just that he was indicted. Secondly, it also kicks in the ability that I just have to prove I transferred stuff into, in this case, FTX, rather than actually showing the FTX transactions. So that's exciting. What's exciting about this? Wow. So let's say you had $100,000 of coins on FTX when it closed down. All right. So it's closed. You can't get access to it. Typically, with bankruptcy, you cannot claim a loss until the judge disposes of the assets. In other words, they're in limbo, and it might be in limbo for a couple of years. But with the Bernie Madoff procedure, we can treat, it's sometimes called the Ponzi treatment. It's not necessarily limited to Ponzi, any type of financial fraud. We can claim that loss this year, and we can itemize the deduction. I did this for a woman a couple years ago who had invested in a mining operation that had monthly charges. All in all, she put in a little over 140,000 into it. Her income, or adjusted gross income, was 90,000. And this thing turned out to be a scam, lost everything. We were able to add $140,000 onto her Schedule A, itemized deductions. This took her taxable income right down to zero. She paid no taxes that year. That's nice. And she had $50,000 left over as a net operating loss that rolls into next year. So that she starts off next year as though she had lost $50,000 of income. So that, it really paid off. It's sad that any loss happens. That's really sad. But at least there's some silver linings. And you really want to claim your loss. You want to claim all your losses of your tax return. I had a guy call me up, Liam. This was a year ago. I think he said, in 2020, he made a lot of money. and he was really concerned. He made $1 million. I think he was like a doctor. He made $1 million trading, and he's worried about the taxes. And I said, well, tell me about that. What'd you do in the previous years? He goes, I lost money in 2018 and 19. I lost $400,000 trading in 2018. I lost $600,000 in 2019. He said, I didn't report it because I didn't want my wife to see this on my tax return. I said, I got great news for you. We're going to go back and amend 2018 and 19, claim these $100,000 worth of losses. Remember that $3,000 is all you could claim, and then the rest of it rolls over. So he's going to have, $994,000 left write-off. He's not going to pay any taxes at all in 2020 for him. So he's like, you're kidding. No, it's actually there. You want to claim and document all your losses. There's a silver lining. They help you reduce your taxes. So yeah. Hey, I'm super excited about this.
Yeah.
With Bernie Madoff, all he did was touch his own investment fund with his fraud. But Sam Bankman-Fried touched a lot of other people. He got money under fraudulent pretexts.
Yeah.
He falsely represented to people what he would invest that money in. He falsely, these are all allegations, of course. He falsely represented to the companies that he invested in, either through FTX, FTX Ventures, FTX US, through Alameda. He falsely represented, he had this money, he invested in them. For example, BlockFi. BlockFi was on hard times. They got a $250 million funding guarantee from FTX. Then it turns out the FTX doesn't have any money. It was illusionary, and they were deceived. BlockFi was deceived, and BlockFi had to, went to bankruptcy.
Yeah, that was bankrupt as well.
Now, the law says that if there's criminal fraud involved, in this case, it's a bit indirect. Sam Bankman-Fried was a promoter of BlockFi because he invested in BlockFi. He falsely represented his investment. He gave false assurances to the people who trusted BlockFi with their assets, et cetera. So you can treat that now, the courts IRS might want to dicker about it, but I think that qualifies, in my humble opinion. So virtually everything that FTX and Sam Bankman-Fried invested in could be eligible for this Madoff treatment. We had the Celsius network closed down, and the state of New York filed a civil case in state law under was Alan Mashinsky and as for criminal fraud action. Yeah, and so that means if you had assets tied up in Celsius, you can now claim the Bernie Madoff treatment on it. So that's
huge
very exciting.
news.
I will say this about the Madoff treatment: a lot of tax software does not support the forms necessary to do this. If you're using TurboTax or H&R Block, they don't support it. Don't talk to them. They'll say you're silly. It's their software doesn't support it. A lot of if you're like solo tax practitioners, a lot of them use, let's say, cheaper tax software that doesn't support this procedure. But it's there, it's real, and call our office, schedule a private consultation if you need assistance on that.
Yeah, you're hearing that first here, CryptoTaxAudit.com. If you're afraid to talk to your wife or your husband, step into the confession booth with Clinton Donnelly and he'll look after you,
Liam, one of our clients, we've been doing work. She's a millionaire, had several millions, but she held it all in. She had half of it on Celsius because she was making interest, right? Yeah. And then the rest of it she had invested in Luna. And I think she was involved in the Anchorage protocol, all that stuff. And like bang, all of a sudden, she's lost, a couple $1 million. Plus she had a loan out on Celsius that she still has to pay. Even though they're not paying her back and she can't get access to it. So, it's real. There's a lot of real pain out there. And, it's worth investing a little bit more to get a great tax return that'll save you a lot of money on your taxes.
Wow. Yeah, there's some really good alpha there. And thanks for sharing that, because like you said, there's a lot of people were burned last year, some way or another. So, there are tax strategies you can use to benefit you. So, yeah, great alpha, Clinton. So people have been asking, let's maybe go back to some basics here. How to calculate gains and losses. You did a benchmark last year on the softwares out there, or call them tax crypto gain services. What did you discover when you benchmarked across? I think it was 5 or 6 different services. I think it was quite staggering.
Oh, it was shocking. I talked to my crypto analytics manager. We have our own in-house crypto analytics and forensic team, and I said, let's benchmark them all using a couple known clients whom we'd already done the gain calculation on. Let's see where they're coming in. We were thinking as more of an ease of use. I was trying to save labor. Looking at what the other services did. I was curious. What I found out, Liam, was absolutely shocking. What was shocking was, I kind of expected that all the services would get us to the same answer, right? Some easier than others. That's kind of what I thought. Shocking, absolutely shocking.
Scary.
First of all, we look at the transaction counts. All right, how many transactions? These services, we did about 10 services. The lowest said there were 170 transactions. The highest one said there was 11,000 transactions. Whoa. And all the other numbers were all in between. Now that tells us that each one of these companies uses very different methodologies. And these guys have experts. They've been doing it for years. These guys know stuff at a real deep level. But they all deeply disagree on how to look at the data. Secondly, we looked at what we call the total proceeds. This would be like, just what's the price of everything you sold last year? Now, I'm not worried about the profit. Just what was the value of what you sold? Now, high frequency traders, which a lot of our clients are, they sell things a lot of times. So that number is going to be a lot higher, even though they may not have really had that much more money in the market. So we thought they should all agree on this number.
Surely.
Oh no, the answers range. I'm thinking of one particular client, the same client. It ranged from 1.1 million to 4.4 million. That's a 4x spread in just the simple question of how much did you sell last year.
Yeah, we're not talking a small accounting error here, a little small roundup. You're talking millions.
Oh, excellent. And that same, whatever causes that difference then rolls over when you try to figure out how much did I buy that coin for. I get that problem. So then we look at the total gain. Now we did this all in FIFO, which is a very conservative approach. The answers ranged from $80,000 or $70,000 to $800,000. Now, if you're a trader, do you want to get a high number or a low number? Well, you want a low number as long as it's realistic, right? If you're the IRS, which number do you think they want? They like the $800,000 number, right? Not the $70,000 number. So, this highlights a bunch of problems. One is if you run one of these services and after you spend hours on it, if you're still racking your head, like you're right up here, you're thinking that number's not right. That's way too high. It's way too low. Odds are it's the software. It's not you. All right. Mm-hmm. Secondly, if that happens, go try another piece of software. If you try another piece of software and that doesn't work, then what I recommend you do is go with the number in your head, because nobody knows you're trading like you. In fact, we created a tax estimator spreadsheet that we share with people, no charge. I think they'll run a ticker on the bottom of the screen. It's at CryptoTaxAudit.com, CryptoTaxAudit.com/tax estimator. There it is. And this is a spreadsheet that'll help you calculate how much taxes you owe based on what you think your gains were. All right. So you're thinking, well, I made 80,000 in gains. I lost 20,000 in gains in trading. I had maybe staking rewards of, 10,000. What do I owe? So this will help you. This is a great tool. I encourage everybody to use it so you can at least make your estimated tax payments by April 15th. Taxes all have to be paid by April 15th. If you file an extension, so you file the paperwork later, but the taxes are still due April 15th. So, so there's a real problem out there. There's a lot of reasons, legitimate reasons, why these numbers for these guys differ, but it puts you, especially as you start to be more of an advanced trader, these services overrepresent how helpful they are.
Well, I had a little, time off at Christmas, and I said, hey, I'm going to jump onto one of these services. So I pulled my API keys, pulled my CSV files, and my wallet addresses, and I plugged it in, and it was all over the place. So I can really build rapport with people out there trying to calculate their own gains. Simple things, Clinton. Like I've got my Cardano wallet where I do some staking on it. Wouldn't recognize it. Didn't pick up, Then I tried to download a CSV file. Wouldn't accept it. I had missing cost bases. A Polkadot address wouldn't get accepted. So I can see the frustration out there.
It's bad. It's really bad. And I've had people call me up saying, I won't name the service. That says I owe 100 million. It's like, there's no way. And I've spent hours on it. There's no way, and so we talked about it. It's really the sophistication of what you can do with crypto trading and decentralized and centralized has reached a point where it's beyond the capacity of most of these reconciliation services to calculate the right number.
Yeah. So, that brings on then to people who do, a lot of DeFi stuff. When you particularly get into like yield farming, you're into play to earn games, NFT trading and minting. I mean, it just gets chaotic. Is there, anything to add there or any recommendations? I know you said to go with an honest figure, but is there anything people should be doing if they're looking to?
This with the decentralized trading, we've done about 30 benchmarks with these. Same thing. We ran them against all the different services. I'm thinking of one client where his numbers for his decentralized trading on one platform came in at 80 million in proceeds. This is not profit, just proceeds. The high end was coming in at closer to 400 million. All right, so we're big spreads. Did I say that right? It was 80 million versus up to 400 million. So big spread. Number of transactions differ. The problem you have, especially with DeFi, is that while the transactions are all in the blockchain, they're not connected in the sense that I bought it for this price on this date, and another date I sold the same thing. We don't have that in the blockchain. And this gets worse as we get into NFTs and other play to earn things. I just can't connect the prices. So, if you just had a few NFTs, it's easy to do. You're going to have to manually connect those dots. But if you're somebody who's doing dozens or hundreds of them, it's a fool's errand to try to calculate the crypto gain on your NFTs, on your play to earn, or if you're an advanced trader with margin trading, you can really get smart contracts. None of these services can really read a smart contract. So that's the problem. So, it's just a disaster for gain calculation. So try, but what you want to do, but ultimately you might want to use your own gut feeling and estimate and pay the taxes. Now, you got to be somebody's back there saying, Clinton, you're kidding me. You just said make up a number and put it on your tax return.
Yeah, it sounds
good about that.
Yeah.
Well, yeah, that's what I'm saying. Because your estimate is closer than any number these services are generating. First of all, right?
Yeah.
The law requires you to provide a reasonable faith report of what your income is, and you've done the best job. It actually is the closest number is the number in your head because you tried the other services. The courts require us to exercise ordinary business care and prudence. What would a prudent man do when running a business, in your circumstances, to calculate the numbers? It's really difficult, especially in a year when you lose a lot of money.
Yeah.
And you're limited to a $3,000 capital loss write-off. $3,000 capital loss write-off works out to like $800 tax reduction. Well, how many thousands of dollars are you going to spend to prove a big number that can only result in a $3,000 write-off? So, there's some real tension there. Now,
yes.
What I do recommend you do is also, a slight ad here, become a member of our Audit Defense membership, which is a monthly membership. If you're a member and you get selected for an audit while you're a member, I will defend you for no additional cost throughout the entire life of the audit, up through appeals into tax court. We will recalculate your numbers as a part of that cost, no additional charge to you. All right, so we'll take it to a fine level of detail, and then when we go into the audit, we don't talk about your original number or where it came from. The first thing we do is we're going to tell them about, here's the recalculated numbers. All right. And odds are it'll be 2 years from now before you get audited on this year. So, it'll be better tools, better instruments to do that. So, and we can fight it all the way up to the IRS. We're very good. We have a lot of success. So, yeah, that's what I'm saying. And I have guys doing, if you pay a number you believe in, then you're going to be paying a fair amount of tax that you believe in good faith. We can take that to court, and that's honest stuff. So yes, if you have some questions, give me a call, private consultation. We'll talk about your situation, what's right for you, and how to make that happen.
So 2 important tips there, Clinton. Visit CryptoTaxAudit.com and look for the estimator tool. I know our marketing team do have a link in the description, so you can find it there. And get signed up for Audit Defense. Yeah, I mean, I've seen you in operation. And I don't want to be the IRS on the phone with you. I've seen how you work. I think that wraps it up, Clinton. I know you want to keep it to the hour. I know we've got some questions from the audience that are dying to get their questions in. So maybe we'll do some quick fire questions with you.
I'll give you 2 things. One thing is we also have a video program that teaches you how to do your own crypto tax return using one of the IRS free file software packages. So, if you're frustrated with your accountant and you have an inclination to do it yourself, our video will teach you how to do it using our bulletproof methodologies. That's on our webpage. I think you'll find it. It's one of our free offerings. Secondly, I did get a person contacted me through Twitter and said, are cashbacks taxable? So this would be where you have some sort of situation where you get a cashback. The answer is no. Cashbacks are not taxable. For example, like if you have a crypto.com card and you get MRO coins or whatever they're calling them this year, for using the card, those are not taxable. Now, of course, these services might pull up a value, a cash value for them, but they're not taxable. IRS has already discussed this with credit cards. Credit cards are giving you rebate dollars and stuff like that. It's basically it's a rebate. It's not income.
Okay.
So what are your next? That's just quick. Hit me with your questions.
No, good. Yeah, good. I mean, all this alpha is amazing. We're covering good ground here. Let's see. Okay. Do you think major regulations will occur in 2023, declaring most of crypto as securities? Yes, this is a big topic at the moment. Can you walk through your thoughts on when this happens? Other than wash rules, what other changes will come? From A. Patel.
In March of last year, the Biden administration issued an executive order asking all the departments of the government to coordinate via the Treasury Department on a cohesive set of crypto recommendations. They came out in, I think, October with a set of recommendations. No surprise here. Most of it was about a central bank digital currency and some other vague statements. And then they asked for an extension until March of this year for stuff that we were really interested in as consumers, tax laws, SEC laws, these sorts of things. So we just have to hold our breath until then. That's going to come out, and then it's going to be in the form of law changes and official regulation changes. So these do not happen by caveat by the department heads. It actually gets approved by Congress, or it has a public comment period. The public can comment on it. So it will remain to be seen. The problem we have ultimately, I think, with this area is the CBDC, because they don't want to treat that as a security. They want to treat it as fiat, and they don't want to do a lot of things. So, but they're really trying to draw a real fine line on something that is nothing more than a blockchain. So not that a blockchain is trivial, but it's just data on a imaginary field. I mean, you're really splitting the hair here. I think we're ultimately going to end up in court adjudicating these things. The IRS fights tooth and nail to go to court, but we're taking cases to court. I have lawyers that I partner with bringing other cases to court. We're going to beat them on these aggressive interpretations that the IRS has.
Amazing. Good question. Let's see if we've got another one. Okay. Is it acceptable to treat adding and removing liquidity on Uniswap as taxable events? If yes, how do you determine the cost basis and fair market value of the asset you get for adding liquidity? Another popular question.
Well, I hope I understand this correctly, but if I am putting a coin out into a smart contract that's now being used as collateral in a liquidity pool, to the extent that I get my coins back, it's not taxable. To the extent I get other coins back, that could be taxable. When is it taxable? is a good question. So, typically, if I'm not mistaken, right, Liam, you put in like ETH and there's like a stable coin, like a DAI that you're being paired with, right?
That's
so,
right, yeah.
And one's going up, the other's going down. So some people want to treat every day that happens as taxable events going up and down. I disagree with that interpretation. I understand the logic. It's a very simple logic. It's promoted by the crypto tax services because that's how their software works. That's not how the law works. In my opinion, you have not really put your ETH in your, it's not your ETH doing that. You've invested in what the IRS calls a financial instrument or contract for investment purposes. So there's a smart contract anchoring this as well. But so you put your money into an investment. Things are happening, quantities are going up, quantities are going down. Not until I get stuff coming out of that investment do I actually experience gain or loss. So think of the liquidity pool as a box, all right? You're not taxed on what's happening in the box. What you put into the box is basis. What comes out of it is, income or a return of your equity investment. So if I put in 10 ETH and equivalent amount of DAI, and then I get back 9 ETH, all right, I had a net loss of 1 ETH. Okay, that's how I look at it. And of course, I'm probably getting more DAI at that situation, and and that would be the excess DAI is now income, because it's income. It's not a capital gain because I didn't have those to begin with, so it's treated as income. Income's taxed at the ordinary tax rates. Okay, so good question. It's a lot of subtlety, and again, these crypto tax services usually recommend in their tax guides things that their software does. I don't necessarily agree with a lot of what's in there. They take the easy road because they're not incented to think their software doesn't support it, and they don't want to make it complicated. Give us a call.
So it's good, good to make your own notes. If you are going to start dabbling in them, DeFi areas, to make some notes on cost bases, because what you're saying is the softwares can get all confused, and you may be paying a whole lot of income that it's not actually technically income. So how do we record losses from bankrupt exchange like FTX? I know we did touch on that.
Let's tease it out. So if it was simply a matter of it being bankrupt, we can't claim a loss because the coins are still your coins. You've filed a petition for them, and you're waiting for a judge to make a decision. They're in limbo, might be in limbo for a few years. That's bankruptcy. You can't do anything with bankruptcy. But with FTX, for example, the promoter of this investment, FTX, Sam Bankman-Fried, has been the subject of a criminal indictment. Now that opens up the Bernie Madoff procedure, which now I can claim 75% of what I've lost this year. All right. The reason it's 75% is because you may get some money back and you reconcile it later. But the neat thing about this, I mean, it's neat, it's a loss, but you can itemize this deduction. So let's say you had $100,000 in FTX and whatever coins that got lost. You can claim the Madoff procedure on it while it's still in bankruptcy. And this year, you can itemize as a deduction $100,000. You could reduce your taxable income by that $100,000. So that's really, really big. It's much better than the $3,000 limit you have on a capital loss. That's why it's a really exciting thing. It gives you relief in the year when you had the loss. Otherwise, so for something like BlockFi, you could do the same thing. Celsius, Voyager, possibly. Do Kwon says that Sam Bankman-Fried was behind the collapse of the Luna, the UST. So remains to be seen. Could claim it this year, and maybe if it doesn't happen, then you just make an adjustment and bring it back. But there's a lot that can be done in this space this year. This is really the most exciting parts of the crypto tax code this year.
Yeah, absolutely incredible. I'm currently watching Madoff on Netflix at the moment, the Bernie Madoff scandal. So it's incredible. It's like we're seeing, Bernie Madoff 2.0, so, maybe there's going to be, there has to be a movie written about this or a documentary, to come in the years.
Oh, yeah. Oh, yeah.
Yeah, it's mind-boggling. Jess asks, Bitcoin layer 2 companies pay small sats for actions. Example, earn 10 sats to listen, spend 10 sats to tip, burdensome to track. Yes. What does the IRS really need? So I guess these are.
Well, this is true. I mean, so yeah, it's a real hassle, right? You have a real hassle tracking all this stuff. I mean, of course, these software products, crypto tax software gain software, it works. They track it all, but ultimately, Jess, these are all trivial amounts. And the IRS auditors, they look for the bigger numbers. They're looking at a spreadsheet. You know, they don't even look at the transaction fees. They're looking at the big dollar amount movements. So yeah, I mean, it's like a little bit of a nuisance, but you have it there. And I should mention that at CryptoTaxAudit, we still have slots open for people who are seeking to have tax returns done by one of the top companies in the country specializing in this field. So just call for a private consultation. We have lots of tools out there trying to help people. Nobody's doing the things we're doing with Audit Defense. If you go to our webpage and read about it, we can really help you through these things. By becoming an Audit Defense member, we pretty much take care of a lot of your other IRS problems for you. It's just a tremendous benefit.
Absolutely. Okay. Let's see. Maybe we'll go for one more question, Clinton. I see we're coming on the top of the hour. What do you think of that? But which tax accounting software for crypto are the best? Okay.
Well, I talked about the statistics, and I should mention that we're going to be I'm coming out with a podcast. We're going to start a podcast series. We're still working on the name. We're open for suggestions. Clinton Donnelly Show, or Clinton Donnelly Experience, something like that. Will be coming out in the next couple of weeks. And I already have an episode where we're going to talk about this in much greater detail. But what do we mean by the word best? I mean, a lot of these sites will promote ease of use. It's so easy to plug in your data. Is that the definition of best?
Mm-hmm.
Or are you looking for like an accurate number? You read these websites. The one thing none of them say is that they're accurate.
Yeah.
You look in the terms and conditions on these crypto tax calculation services. In the terms and conditions, they, in so many words, specifically disavow any claim or representation to being accurate. None of these services will defend you if you're audited. They might give you some assistance, like they'll give you a backup file or something, but no, they won't be there. You're on your own. So what do you mean by best? It depends on your perspective. There are certain services that generate low numbers more often than high. There are certain services that generate higher gain numbers than low. So I don't know which one is correct. In an audit, I don't have to prove that your number's correct. I just have to prove that the IRS calculation is wrong. And of course, they're using one of these services too. So they got the same proof problem that you have.
Really interesting point.
So best.
Yeah. So you just need to prove that
people
they're
get
wrong.
religious about these things, but falsely so. Here's what happens. I mean, when you run it in, remember I told you about the total proceeds. One comes in very low, another one comes in total high.
Yeah.
You then have to, let me put it this way. Certain services, when you load in your transactions and you're moving from one wallet to another wallet, if they don't see that link internally, that it's just not jiving for them, they can't work out the time zones. Certain services will say these are non-taxable. They'll wait for you to tell them they're taxable, right? That service is going to give you a lower result. Other services will say if we can't make the connection, then it was a taxable transfer in and a taxable transfer out, and the amount of income that you're going to have to report is going to be much higher. With those services, you have to work really hard to get those false income events down. You have to unmark them as being taxable. So they all have different perspectives. You don't know how these things work. You're just a Sunday user. You use it once a year. You use this thing. It's easy to use. You read the help. They seem nice when you talk to them on chat. That doesn't make it accurate.
So you really need to be keeping your own track on, what you're buying, what you're selling, and, really go through it with a fine-tooth comb and not just say, hey, this accepts my MetaMask. Oh, brilliant. It accepts my Coinbase CSV file. It must be accurate. It spits out a number. So you really need to have your wits about you.
So we do, high-end gain calculation for people with complex. I mean, we've never turned anyone away. We use roughly 3 different tools. I'll just be honest to this last guy. We use 3 of them. The right tool for the right situation. And a good craftsman never complains about his tools. We put the craftsmanship in. Our financial analysts, we have a methodology. We work it religiously. We review, we document, we get people to much better numbers than they typically do by themselves, and we can justify it. So, we know what we're doing. We actually typically have level 2 support into these services. We had one service, their data loading, they were loading all the buys in as sells and all the sells in as buys, and the data was all jumbled. We're like the first one to find out about it because their import routine broke. We called them up and, we got it fixed. So, but you might struggle as a user not understanding where this data came from. It's wrong. That's the problem. So, hey, it's been super exciting. Go to our website if you want any help. We'll be letting people know about our podcast. I think we're dig deep on a lot of these topics.
It's exciting.
Taxes are sexy, and I'm glad you guys listen to all our podcasts.
You have to get that in there. Taxes are
sexy.
I love it. Hey, I wanted to congratulate you, just as we're closing out, just congratulate you. I seen you got your face on Goose magazine. It's like a tech and crypto magazine. So
this is a new magazine. It's going out on private jets. All right. So it's a very exclusive magazine, and it's all about crypto investing and strategies. We have an article in there about what to expect from an IRS audit. Super exciting. They're getting a lot of action on this. So,
yeah, congrats on that one, Clinton. It's a good read. I think we've also got a link in the description for anyone who's interested in looking at that. So, you heard it here. Yeah, so visit CryptoTaxAudit.com. We've got the tax tool, the estimator tool. Check out the Audit Defense and sign up for a consultation for all your tax needs. Clinton, it's been a pleasure talking with you.
Pleasure talking to you, Liam. All my best to everyone. 2023 is going to be a great year.
Trade well, my friends.
Bye-bye.